Hey guys, welcome back to the channel. Today we're conducting Arrival stock analysis. We're going to be talking all about Arrival stock, its recent hammering, what's going to go on going forward, why it actually got hammered in terms of its share price and where its market cap currently is, and what the future of this company is. Is there still a lot of potential in it? They are potentially making an entry into the Metaverse, which is super exciting. That is one of the key subjects for this year, is what stocks are going to do well out of the Metaverse, and this one could be something that could leverage that at least a little bit going forward. So let's take a look, let's get in there. Hey guys, welcome into the video. Here we are on the landing page for Arrival stock, and as we can see, the share price has suffered a huge sell-off since November the 2nd, from $17.80 down to $6.70, and now a market cap of 4.2 billion. And that was for a couple of key reasons. It was not performing as well as it should. It pushed out its timelines for when it's going to deliver its vans and buses, and said that it's going to have to get some more capital in order to do so as well. And it actually sold some extra stock in order to raise capital, which has also diluted the share price a little bit. So that's some of the bad news about this company, but what's going on for it? Why were investors originally keen on this company? And that still hasn't really changed. What it's actually trying to do to the market, to the EV sector, to the van and the bus sector, is still happening. It's still a very important topic. It's just going to take the company a bit longer to do so. So firstly, let's jump onto their actual page, and we can see there we've got the Arrival van here looking good, and it is completing or getting very close to completing its prototype stage. So it's also looking at buses obviously, and the car, digital products to enable smarter connected fleets of trucks. UPS will be very happy with that. And then there's a couple of key things that I wanted to look at here as well, is charge cars, which will be powered by Arrival. These are Mustang cars, but we'll be using Arrival's electric technology to make an electric Mustang even. And then we have Robo Race, which is AI racing robots, which is the company jumping into the Metaverse, which should be super interesting. More on that in a little bit. So firstly, we're going to have a quick look at Charge, which is a company that basically is electrifying Mustang vehicles. And as you can see here, these are phenomenally good looking vehicles. There are up to 500 available. They look absolutely fantastic, or at least initially there will be 500 available. The product looks brilliant. It's a really good looking car, obviously because it's built on a Mustang. It's got some really good metrics: 200-mile range, quick 0 to 60, 3.9 seconds. Really good technology built on essentially Arrival tech, and the car's going to start at £300,000, and Charge is a British company, so that is something going forward. And there's some of the history there. They've got a partnership going with Arrival. Now moving on to Robo Race, which is the company's entry into the Metaverse. I'm not an expert on the Metaverse, but this is a mixture of between physical racing and actually happening in the, obviously, the virtual, the Metaverse world. It's super interesting to see, and they hopefully should be able to leverage this a little bit more in the future. Get yourself on Twitch, get yourself onto the Robo Race website and have a look for yourself. They've already got a few partners involved in this as well, the likes of Trimble and the like. There's a few more involved in it too. It's a really good, really interesting new jump for the company to go down. Of course, its actual physical side of things is going to be, its bread and butter is going to be building electric vans, building electric buses, but it is still a super interesting concept to see them going down this point of view, which is really, really good. So what is the bread and butter? Well, they actually want to electrify the United Kingdom and electrify the world, basically, and they're going to work on that as hard as they possibly can with the capital that they've got. They've got a modular type of construction using microfactories instead of Goliath huge factories that have one production line, one after another. First we fit this, then we fit this, then we fit that. These robots are going to be multi-capable and able to build in the car on the same spot, basically, over and over again. They're supposed to be extremely safe. They're going for true sustainability with really good kinder to the environment materials involved as well.
Here we've got some pictures of the van going forward. UPS are big customers involved in this. It's been very well designed. It's gone through its prototype stage. It's doing extremely well, and it has had really good feedback from UPS as well. And as you probably already know, they have UPS have 10,000 vans on order with an option for 10,000 more. The bus is also doing pretty well. That's actually going to be the first product that Arrival builds over in the United States at one of the micro factories out there. It's a really good bus and a really good way for the bus companies to electrify their fleets. So that's fantastic also going forward. Then this caught me out by surprise, really. Arrival getting into the future of ride hailing, directly competing with Tesla to a degree there, and they've actually signed a deal with Uber to supply their vehicles to be used specifically for ride hailing. So that is very good. It's a very good car specifically for passenger transportation. That's what it's going to be designed for. It's going to be very compatible with Uber, which is excellent for both companies. The ride hailing sector, apart from what's happened in the pandemic, was a massively growing sector, so that's going to be absolutely awesome going forward. It's still going to take a little while to spin that up. They've primarily focused on building the bus and the van first and building out the micro factories for that, but make no doubt about it, the car is in the pipeline too. Moving on from that, we're deep in the investor presentation here. And this is what they're striving to achieve: create tens of vehicle platforms and produce them in hundreds of micro factories worldwide. Now, as mentioned, they've revised their expectations for 2022 to be more conservative, but they are still confident of significant growth. Now, they need the capital to build out these factories in the first place, and they need the revenue from them. So they need to build the factory first, obviously, to generate the revenue, but then they need the revenue to build new factories. So don't be surprised if this company isn't profit making for a while, but what we are watching for is significant revenue growth and significant output of vehicles. That is what is most important. They already have 2,400 employees on the books working towards this mission, and they have 64,000 pre-orders of vehicles, broken down mainly into van and bus, and then broken down by region. Roughly half is America, half is Europe, and then 11% is the rest of the world. They've already established 8 partners for repair and maintenance across the US and Europe, which is good. And they're starting production at Rock Hill in Q2 2022, Bicester, that's here in the UK, Q3 2022, and Charlotte Q4 2022. So watch that space going forward. When vehicles start coming off the production line and start getting delivered, the share price should definitely tick up. The priorities are still definitely bus and van. These are the key dates for what's going on in terms of the trials for the bus and in terms of the trials for the van. So progress is being made, and that is very important. This is the micro factory latest scheduled for Q2 production 2022 in the US for the bus, van micro factory Q3 2022, and then the van micro factory in the US Q4 2022, and hopefully spinning up output very, very quickly. These are key dates. If the company sticks to these goals and starts spitting out buses and vans, the share price will inevitably tick forward as people will gain confidence in the company, and that's all it's about. It's still a pre-revenue company at the moment, but it's on the very precipice of being able to become a revenue producing company, even if that is just a few million to tens of millions initially. That is a key goal, is to get production started. If they start slipping on these, then the share price will stay depressed for a lot longer, and they won't actually be able to, they might struggle to raise the extra capital going forward. So Bicester has already cost $75 million, and Rock Hill has already cost $50 million. So they've committed a lot of capital to this already. But eventually revenue will start to be produced, and they can reinvest that money straight into building higher voltage batteries, building batteries in-house, and expanding that micro factory production. So they made a 26 million loss last quarter, but that's because they're not a revenue producing company. You shouldn't be too fussed about that at the moment, as long as they've got the capital to continue operating, which they absolutely have. They spent 81 million in the last quarter investing it, but they're still sat on, as of the 30th of September 2021, they still have 440 million in cash still to spend. So that is still a good few quarters worth of not making any money that is already funded by the capital that they've already got. So we need to monitor the cash burn rate, but they've still got enough money for the coming quarters, plenty of coming quarters, and when they start generating revenue, that will obviously start boosting that back up again, and they can re-spend that money going forward. So they expected to spend another 110, 120 million in quarter four, obviously then leaving them with about 320 million for the coming quarter. So they can do 3 more quarters, draining the reserves completely after quarter four 2021, and still have the money to do so without even making a penny. I suspect that if they don't make a penny in the coming quarters, then there will be another share sale to fund further capex and keep the company going until it can produce revenue. You need to watch the space for that, because that can again put downward pressure on the share price. But if they do hit the revenue targets, they do hit the production targets, the share price can tick up that way, and the revenue can be re-spent, obviously, as I've already said. They're still spending a lot of money on R&D and tooling, and being right at the very forefront of investment. These are the big things. The plan is to reach full capacity in early 2023 for these factories. If that becomes the case, significant revenue will be produced, and they've got the capital to reach this. As long as they deliver, this can happen, and the share price can I'm not going to say skyrocket upwards, but tick upwards significantly as investor confidence builds in the company. But it is a little bit of a risk to sit and wait, because we're still waiting for the company to deliver, and that's what the company has to do. It needs to deliver on what it has actually said that it's actually going to. Obviously, microfactories are a different way of doing things, so there are going to be hiccups on the way. Naturally, we've already ran into them, but again, if they can actually do it, and this does become the norm, or this does become a more favourable, profitable, efficient way of doing things, that will be great for the company going forward. These are just the last few things from the investing presentation, and the last thing I'm going to finish on is what the Motley Fool basically said. Some people don't like this website. This is a bit harsh what they said. They compared it to a penny stock, where they talk a good game, they have big plans, industry changing ideas, which is kind of a bit what Arrival has done, but they never seem to have the capital to bring them to fruition, and investors see their stake diminish, and that is some of that game plan has actually happened. But Arrival has some massive backers in terms of Uber, in terms of UPS, Hyundai Motors, BlackRock, Kia Motors. A lot of companies are involved in this company and providing capital and expertise. They've also signed a deal with LI Cycle Holdings, which are going to produce the and provide the lithium ion batteries. So Arrival going forward could be an absolute winner, or it could sort of come a bit stagnant, and if it doesn't start delivering, that's when we're going to see some negative pressure on the share price, and that could spell trouble. However, the share price has depressed pretty low as it is, and most people who are going to sell have already sold out of the company. But further negative headlines will obviously put pressure on the share price. But positive news and positive production starting, vehicles rolling down the production line, and revenue being produced will send it obviously the other way, and could send it the other way quite dramatically as well. So for disclosure reasons, I do have a position in Arrival stock, and I've been conducting this analysis anyway because I hold a position, so I am actually holding at the moment. I am at a loss as well of quite a few percent. Not as bad as some people, I might add. I got in very early on when it was a special purpose acquisition company, so I've not lost too much, but obviously the share price is below the $11-12 that I would have originally paid when I got in, so I am sitting at a little bit of a loss. But I am confident in this company going forward. I feel confident about it. I like the fact of where it's going. I was a little bit annoyed that it missed some of its targets, but this does happen when you're revolutionising the way you're going to build a van, the material that you're going to build a van out, and it being electric vehicles, etc. It's going to come, and being a new company, it's going to run into these things, and I'm confident that they can overcome this, start producing revenue, start producing vehicles, get them microfactories up to full capacity, and reinvest that revenue to build more microfactories better. And hopefully when that
upwards pressure goes onto the share price, it will return a nice healthy return for me. And then even then, at that point, when they are producing these vehicles and they are producing revenue, they can then go to investors and say, yeah, we're going to sell a few 100,000 more shares, but guess what, we're a growing company, we can do that, and it hopefully shouldn't affect the share price too badly. The company is at a very crucial time in its history at the moment, and it needs to deliver. Thank you very much for watching today, guys. Please do like and subscribe to the channel. Absolutely fantastic doing all this research for you. Hopefully I'll catch you in the next one. See you later.